All right, welcome to another edition of the ShadowTrader Video Weekly. Today is, of course, Sunday, June 16th, 2019. No fancy intro this week, just a little bit short on time. And also this video is going to be a little bit more concise. There's not that much to say given the balance that we've been in for most of the week, but that balance actually gives us a lot to say because, as we know, balance leads to excess and excess leads to balance. So let's get a little bit deeper into that so we can understand exactly what these concepts mean. So this is what is known as balance when we are moving in a small range and holding. And I am assuming bullish here, and the reason you want to assume bullish is simply because you go by what the prior trend was before the balance. So we have prior trend of bullish straight up and then balance, and also notice where it's balancing is that you have these highs here, and the market was able actually to take out those highs. And in pulling back to sort of work off some of the froth of this move, where did it pull back to? This is another interesting point. Notice that you pulled back right to the 50 MA daily and thus far have not been able to go lower below it. So that's why the title of this video is Pressure Cooker, because this is like a little mini pressure cooker. This value, this area here, essentially is building up pressure for the next move because, as we know, balance leads to excess. What is excess? Excess is like a big move in one direction. That's excess. On the market profile, we call excess those single prints at the top of a trading range. In a market profile distribution, the excess is the top or bottom where there's an elongated part. It's essentially where range gets extended. And in this case, we have range very compressed. The other thing that I want to point out, which is also noteworthy, is the fact that this range is being contained by, I believe, around number 2900, and that oftentimes is really just a whole lot of nothing. I don't know how else to explain that, but the best way to say that is when you see numbers like that acting as like a support or resistance, it's really not all that meaningful, and those numbers will probably get taken out. Although I don't really think in this case that it's strictly the 2900. It just happens to be that these prior highs were in that area. The market, once it lost 2900, had difficulty getting over it, and now that we've rallied right back to 2900, it makes perfect sense that the 2900 area would be an area of congestion. So we are thinking bullish for next week if we can resolve this to the upside. NDX has the same type of pressure cooker going, and look at this, same exact thing, very small flag. One of the things you want to look at, which is just real simple, very simple analysis, is just look at the size and pattern of the candles themselves, of the individual candles. So when you see that you have expansion of range on big candles in one direction, then you have smaller candles afterwards in the consolidation, that usually implies a continuation of the trend. Okay, let's get into market profile so I can show you just a couple of nuances that support this whole balance pressure cooker theory. There's some really interesting things going on this particular week. These 5 days that you see here in front of us, they are the 5 distributions of Monday, Tuesday, Wednesday, Thursday, Friday. And one of the nuances that I've been pointing out all week to my Peter's Pre-Market Perspective subscribers, which I feel is bullish, is the fact that when we started to come in, notice that we made what's known as a poor low. And a poor low is essentially a low that has no excess. Excess are those single prints on the bottom. It's when the auction completes itself properly, for lack of a better ways. It's a completed auction as opposed to an incomplete auction. When you don't have excess on the profile, you have an incomplete auction. And as I always like to tell people, the bigger import from these poor highs, poor lows is the fact that it's going to push away from those poor highs or poor lows. They do need to be repaired eventually, but the first thing you want to be thinking of is that price wants to go away from there. And the reason for that is because the dominant faction, which brought price downward to that area, it got tired and nervous at the lows. If it didn't, it would have sold further and made an excess low, and this would have had a little tail on it, but it didn't. So every time the prices came to a certain level, you see that nervous shorts started to cover. And what that does is it essentially builds up a bunch of pressure at the low end of the range, and the next day is usually a gap higher, or the market just goes higher. And you can see the next day it indeed went higher. Now, interestingly enough, this phenomenon has been building all week in that we went poor low to poor low to poor low again to poorish low. I call that lack of material excess. There's only one TPO there, that's essentially by definition a poor low. You need 2 TPOs of on the bottom to call it excess, so just one is a poor low. And Friday, same thing, lack of material excess where there's only 1 TPO, that's also considered a poor low once again. So this is a dynamic that is showing us essentially that sellers are not able to get a foothold. Every time they get it even just a little bit incrementally lower, they get nervous and they start covering. It also tells me that for now, it doesn't appear like there's many sellers out there at all. And again, I think of that as bullish because it's in the context of that move to the upside and then that sort of balancing off from there. The other dynamic that I was looking at all week that I found very, very interesting is by paying attention to opens, highs, lows, and closes very closely and seeing where prices finish. Essentially, what is your close, right? So if you notice on Monday's action, the red boxes are all of the closes. We know that the market is very overbought coming from down here, from this huge run-up. So we would think that there should be some sort of a correction, and we also know that right in here, we have all this poor structure that could be repaired. We know that this area probably would not offer any support if prices were to come back down through it. It's kind of like a price void. It's not a gap, but you can think of it as a gap. And this here is a little gap. You can see the green arrow. That's an unfilled gap. So you would think that if prices came into this area, they would collapse a bit. Well, to make a long story short, prices never came anywhere near that area. This activity here is overnight activity, which doesn't really count. And even that activity wasn't able to get deep into the single prints. So that in itself speaks to the theory that I talk about very often, which is essentially when what should happen doesn't, you should really start thinking about the other direction. Okay, going back to these RTH distributions, when we made the poor low on Monday, again, you have to be thinking to yourself, as this is unfolding, the market is way overbought, it should be correcting. Should be correcting, but what happens on Tuesday? We actually take out the prior day's low, but where do we close? We close above it. We close inside of range, and we also have most of the activity, or a good amount of the activity, inside of the prior day's range, which indicates balance. On the next day, which is Wednesday, the same thing. We make a poor low again, and where do we close? Here's the prior day's low, and we close above the prior day's low. Not only that, we have a fat distribution here, very wide, with a lot of market profile references all piled up in one spot, which would be this wide point of control, this settlement, this half back overnight, this is half back of the RTH session. All of it comes together in the same session, and what happens on Thursday? Look at where the low is. Right where that interesting area starts, right at half back. Again, very, very nuanced, very tight reference. Now, you could look at this not only as a poor low, but also as a weak low. Why is it a weak low? Because it came down specifically right to a market profile reference. And when markets come down just to a perfect market profile reference, these are nuances that almost nobody out there sees, those lows are deemed weak because, think about it, who's buying at those levels? Really only very, very specific day traders that have short-term time frame outlook. So that's what happened Thursday. Friday, same thing. Poor low again. Where do we go? Right into the heart of this area. And where do we close? Way up here. And Thursday, by the way, same thing. Close up here. Very strong close, well away from the prior day's low, which we failed to breach, and even above the high. So overall, these are the nuances that I see that keep stacking up. And the one thing I want to leave you with as well is these poor lows, when they start to stack up, remember, they stack exponentially. First of all, 5 in a row is a huge amount. This is I've almost never seen this, that we've had such a tight balance with multiple poor lows, but they stack like this exponentially, and that just simply means that 1 + 1 doesn't equal 2. If you have 2 poor lows, it's more powerful than just 2. If you have 3, it's more powerful than just 3, and in this case, we have 5. Okay, last thing I want to leave you with, and this is really the big wild card for next week, is the fact that, believe it or not, the Federal Open Market Committee is actually thinking of lowering interest rates as early as next week. These are the numbers. Let me just start here in the beginning. I apologize. This is for next week. That was actually the next one. I'm getting ahead of myself. But there is actually, as of now, a 22.5% chance that they ease. This is the target rate, 2.25, 250, where we are now. So there's a 77.5% chance that they stand pat. This is amazing to me because obviously unemployment is at record lows and the economy seems to be doing fine, and I don't really know what the reason for this easing is. I have no idea, other than to prop up the market. So, but regardless, that's just my opinion that this is nuts. It doesn't matter. But the fact is, this will obviously be construed by the market as very, very short-term bullish if there is such a cut. We'll see. Probably on this particular meeting, we will not get it. But then when we push out to July 31st, and this is just kind of thinking ahead because obviously it's a long way away and a lot can happen from then to now, you should know that there is actually an 88% chance right now, according to these Fed funds futures, that they ease then, which is amazing, and only an 11.8% chance here that they remain pat on that July 31st meeting. Again, if this happens, I would think the market will rip to the upside in a big way. Imagine if that gets coupled with the tariff thing being resolved, for lack of a better word, who knows? So we shall see. But just an advance heads up there on the FOMC meeting that's coming next Wednesday. All right, so going back to the price charts, just a brief recap of everything that I was discussing. Basically, the pullback here has been very, very mild. We talked about balance. We have a 4-day balance happening here, really a 5-day balance. If you look at all of those, we have poor lows. We have a pullback that thus far has not even been able to breach the other side of the 50-period moving average. We also have a very key level to contend with of the 2,900 early next week. What does all this mean and how do we play it? I think it's pretty simple. I think you have to buy the breakout of this balance, which you would buy on a break of the downtrend here or on a push above this bar. That would put you well above the 2,900. And where do we target? Well, obviously we have to target the prior high, swing high there, I should say, at 2,950. If we look at this on a longer term chart, we get the exact number, 2954.13. That would put us at all-time highs. Also at a very, very interesting triple top here. And as I always say, if double top, yes, triple top, usually not. Believe it or not, could be higher. If you put that together with the Fed giving a little bit of a boost to the market, there's really no reason why that can't be in the cards. All right. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading and good night.